traders, John Fortune here with this week's weekly Forex forecast for the 25th of March to the 29th of March 2019. As always, we're going to start off by looking at US dollar index and oil before running through a number of markets, looking at the key levels of support and resistance in the process. And we're also going to be highlighting some of the targets that we're going to be looking for in the coming week and also in the weeks ahead. So let's jump over to the charts and see where the money is this week. As always, starting with the US dollar index. Now, last week the near-term uptrend in dollar index actually failed, and we are entering a potential range or even a potential bigger reversal. This is not yet a bigger reversal in the dollar index, but we are now in a ranging mode, possibly the precursor to a bigger reversal. As you can see, we have actually got enough technical bounces here to establish a potential range in the dollar index. So very simply put, we are going into next week neutral on the dollar index, albeit with a slightly bearish bias. So we are bearish to neutral on the dollar index. And we're treating this as a correction to look for further declines in the dollar index. So if we can get a pullback here, and we're going to be looking for a reversal, preferably if we can get one more retest of the 97.29, this would in fact be the right shoulder of a potential head and shoulders reversal pattern. This is going to provide a great place, especially to start to look for further declines in the dollar index. And we're going to be looking down towards the next key area of support to the downside in the target set, the 95.66. And if we can get a break through here, we're going to be looking down towards the next key area of support to the downside in target 2, the 95.20. So next market we're going to look at is crude oil. Now, we are still trending to the upside in crude oil. We did take out the target that we had here over the last 2 weeks in crude oil, and we started to get a decline from that target after it was taken out. Some profit taking came in. We are treating this just as a correction because the near-term uptrend in crude oil is still intact. So any correction, any pullback in this area, we're going to be looking for a reversal. We're looking for bullish formations and patterns to take long positions in crude oil. If we can get a further pullback, and preferably, as always, if we can retest broken resistance turning support, this is going to give us the best risk to reward. This is the best area to start to look for those bullish formations and patterns. And if we get the right kind of bullish formations and patterns in this area, we're going to be looking at initiating longs up towards the next key area resistance to the upside in the target set, the 61.25. And if we can get a break through there, we're going to be looking up towards the next key area resistance to the upside in target 2, the 62.70. So next market we're going to look at is euro dollar. Now, inversely to the dollar index, we do look to be forming a potential inverse head and shoulders in the euro dollar. So very simply put, any pullback in this area, we're treating this as a correction, and we are looking for further advances in the euro dollar. We're going to be looking for bullish formations and patterns, and if we can get one final retest of broken resistance turning support at the 1.12410, this is going to be a great place to start to look for bullish formations and patterns. And if we get the right kind of bullish formations and patterns in this area, we're going to be looking at initiating longs up towards the next key area resistance to the upside in the target set at the 1.1514. So next market we're going to look at is pound dollar. Now, last week we came down and we bounced at the key area of support, highlighting last week's video, the 1.30560. Very simply put, we are looking for further advances to the upside in pound dollar. If we can get a pullback, and preferably if we can get a retest of broken resistance from the past, turning support once again at the 1.30560, any pullback in this area is going to be a good opportunity to start to look for bullish formations and patterns. And we're going to be looking at initiating longs up towards the next key area resistance to the upside in the target set, the 1.3364. And if we can get a break through here, we're going to be looking up towards the next key area resistance to the upside in target 2, the 1.3452. So next market we're going to look at is the US dollar Japanese yen. Now, we go into this week below a key area of broken support from the past, potentially looking to turn resistance to the 111.150. We are now in a near-term downtrend in the US dollar Japanese yen, and so we are just looking for further declines to the downside. If we can get a correction and we want to see a pullback in the US dollar Japanese yen, anywhere in this area will provide a good opportunity to start to look for bearish formations and patterns, but preferably to give us the best risk to reward, if we can get a retest of broken support turning resistance, this will be the preferable place to start to look for those bearish formations and patterns. And if we get those right kind of bearish formations and patterns in the US dollar Japanese yen next week, we're going to be looking at initiating shorts down towards the 109.07, which is the next key area of support to the downside. So the next market we're going to look at is Aussie dollar. Now, last week we bounced at a key area of resistance highlighted at 0.71380. This is an area where we can start to consider looking for bearish formations and patterns for further declines to the downside. The first thing to note, of course, is that the US dollar is neutral or slightly bearish to neutral. And so any shorts in the Aussie dollar will likely be short-lived. And you can also see that reflecting this kind of neutral stance in the US dollar index. There are likely next week to be some currencies setting up slightly stronger than the dollar and others setting up slightly weaker than the dollar. And as we go into next week, the Aussie dollar is still structured to the downside. So very simply put, if we can get a pullback, and preferably if we can get a pullback and a retest of the key area of broken support, turning resistance at 0.71380, this is going to be an area we can start to look for bearish formations and patterns. And with the US dollar being neutral and not particularly strong going into next week, we will need to specifically see those patterns taking place first, these tradable patterns, in case this just breaks through and starts to trend up towards the 0.71980. But if we get those reversal patterns in this area, we're going to be looking at initiating shorts down towards the next key area of support to the downside and the target set at the 0.7027. So the next market we're going to look at is New Zealand dollar. Now we start the week above a key area of broken resistance, looking to potentially turn support at the 0.68260. We are in a near-term uptrend now in the New Zealand dollar after that failure of the coiling pattern last week. So very simply put, we are looking further advances in the upside in the New Zealand dollar. Any pullback in this area, we're just treating it as a correction to look for further advances. If we can get a pullback, and preferably as always, if we can get a correction into broken resistance, turning support at the 0.68260, this is going to be the preferable place to start to look for bullish formations and patterns. And we're going to be looking at initiating longs up towards the next key area of resistance to the upside and the target set at the 0.6969. And if we can get a breakthrough here, we're going to be looking up towards the next key area of resistance to the upside and target set at 0.7020. So the next market we're going to look at is US dollar Swiss franc. Now we start the week below a key area of broken support from the past, looking to potentially turn resistance at the 1.0011. Any pullback in this area, we are looking further declines in the US dollar Swiss franc. So any pullback in this area, we're going to be treating as a correction to look for bearish formations and patterns. And preferably, if we can get a correction all the way into the 1.0011, this is going to be the best place. Assuming we don't start to reverse before this, this is going to be the best place to start to look for those bearish formations and patterns. And if we get the right kind of bearish formations and patterns in the US dollar Swiss franc, we're going to be looking at initiating shorts down towards the next key area of support to the downside and the target set, the 0.9846. So the next market you're going to look at is the US dollar CAD. Now just something to note before we do the US dollar CAD, you can see although we had a decline in the US dollar index last week, the dollar actually strengthened against the Canadian dollar. So when we talk about the dollar being neutral, and therefore, for example, like this week we're going to trade the currencies on their own merit, it's because even though we may be looking overall at a decline in the dollar index, it's not weak enough for all of the currencies to actually move up against it. So very simply put, looking at the US dollar CAD, we did get this bounce from the 1.3306 last week. We are making our way towards the target for anybody not involved already in the US dollar CAD. If we can get a correction into this area, any correction into this area, preferably as always to get better risk reward if we can come back and correct into broken resistance, turning support once again at the 1.33060. This would once again provide an opportunity to start to look for bullish formations and patterns, taking out the target set from last week at the 1.34670. And if we can get a breakthrough here, we're going to be looking up towards the next key area of resistance to the upside and target 2, the 1.3564. And last but not least, we have gold. Now, ever since we bounced at the 1284.10 in a couple of weeks back, we were looking at this to be a bounce point in gold. And we were looking from the 1284.10 all the way up to the 1320.67. It was a little bit of a longer term target. It wasn't going to be achieved in a week. But over the last couple of weeks, we have been making our way towards the target of the 1320.67. We came very close to it last week. And it does look like going into this week, we will now complete this target at the 1320.67. Once we take out this target, this is an area we could see at least a short near-term bounce to the downside. Now, with the US dollar index not being particularly strong, we will have to actually get some reversal patterns in this area. But once we take out the target of the 1320.67, this is an area we could start to see some profit taking coming in. And we're going to be looking in this area for bearish formations and patterns. And if we get the right kind of bearish formations and patterns in this area, we're going to be looking at initiating shorts down towards the next key area of support to the downside of the target set at the 1301.00. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everyone who does that on a regular basis, and a big thank you to everyone who has subscribed to the channel so far. I want to finish off by wishing you all a fantastic weekend, and I hope you all have a very profitable week next week. The only thing left to say is take care and don't forget to trade safely.